2 days of support holding, 2 days of recovery. And today, the market said enough. 380 points, one direction, all day long. And now market is sitting right at the support zone that matters most. The big question every trader is asking tonight, is this the bottom? Let me break down exactly what happened today and what the chart is telling us for tomorrow. Market opened around 24,280, almost exactly where it closed yesterday. First candle dipped briefly to 24,210 and recovered back to the same level. For a moment, it looked like another repeat of the last 2 days. It wasn't. From the very first, our market started selling off. And this is the important part. This was not a panic crash. No sudden gap down. No brutal single red candle. This was a slow, controlled, one-way move lower. Candle by candle, hour by hour, all the way from 24,280 down to 23,848. Approximately 380 points spread across the entire session. This kind of move is very different from a panic sell-off. Panic has sharp spikes, huge volume bursts, fast moves. Today was slow, orderly, and controlled throughout. That difference matters, and we will come back to that in a moment. Around the 24,178 to 24,200 area, yesterday's price structure was broken down. I have marked this on the chart. This level now becomes an important resistance for the coming days. For any meaningful buying to develop, market needs to first reclaim and hold above 24,178 to 24,200. Until that happens, this is the ceiling. Watch this level every single day this week. What is the chart telling us? Now back to the important question, is this the bottom? Look at today's move carefully. Slow, controlled, orderly descent into a known support zone. And importantly, look at the volume towards the end of the session. There is a clear increase in volume at the lows. This can mean two things, either aggressive sellers pushing price lower or institutions quietly accumulating at these support levels while retail traders panic. Nothing in the market is certain. We always trade probability. But a slow controlled sell-off into a strong support zone with increasing end-of-day volume, that is a pattern worth respecting. The pain of today's move has largely been factored in. A bounce from here is a real possibility. We will know more tomorrow. That is when the chart gives us the answer. Levels for tomorrow. Market closed at 23,848, right at the edge of the 23,600 to 23,800 support zone we identified in the weekly levels video. This zone has held twice already this week. It is now being tested for the third time. Is this the bottom? Here are the levels that will answer that question tomorrow. On the resistance side, first watch 24,000. This is the immediate resistance and a psychological round number. Beyond that 24,178 to 24,200 is the bigger resistance, the broken price structure level. For any real recovery, this needs to be reclaimed. On the support side, 23,600 to 23,800 remains the key zone as discussed in the weekly video. Even if market dips slightly below this zone, 23,500 is where I expect a strong bounce. That is the absolute floor I am watching right now. Beyond that, I am not seeing reason for further downside at this point. Overall bias, cautiously bearish. But the support zone is strong, has held multiple times, and today's price action gives reason for optimism. Manage your stops, trade the probability, and always respect the levels. 380 points down today. Slow, controlled, and closed right at the support zone that matters most. The chart will give us the answer tomorrow. Watch the open. Watch how price reacts at 23,600 to 23,800. That reaction tells you everything. Now I want to hear from you. Drop your answer in the comments right now. Do you think this is the bottom? Does support hold or break tomorrow? Every comment helps build this community of traders who read charts together. Subscribe and hit the bell. I break down the Nifty 50 chart every single trading day, so you are always prepared. Trade safe. See you tomorrow. Thank you.